I'm Matt Bichard for REIT.com, and I'm here in Miami for Akerman's U.S. Real Estate Summit. Joining me is Tom Sittema, CEO of CNL Financial Group. Tom, CNL touches on a number of different sectors, but one of the areas where you were particularly active in 2011 was in healthcare, particularly as it relates to senior housing. What attracted you to that sector, and what are you seeing there going forward?
CNL has a long history in the healthcare space, having previously founded and built a REIT that ultimately was liquidated at over $5.5 billion in 2006, in October of 2006. So in one sense, we're returning back to our roots. But we clearly like the sector, not only because we have expertise in the space, but we like it because we feel like we have the demographic wind at our back, if you will. We all see the aging statistics that 10,000 people turn 65 every day. The over 75 age group is growing at 4 times the rate of other age cohorts. People are living longer. There has been virtually no new construction in the industry, which is true with most sectors, but including the healthcare space. So we like the demographic profile of the space, our expertise in the space. We have long-standing relationships with operators across the country, and so we've been very active in 2011, and we expect to continue in 2012 in that space.
Another area where CNL was very active in 2011 was in equity and debt raising to the tune of $2 billion. How did that process differ, as a result of the financial crisis, and what are your prognoses for 2012?
We had a very, very robust 2011. We acquired well over $1 billion in assets. We financed those assets and refinanced other assets. So we raised about $1.25 billion in debt. Roughly the debt breakdown is about 1/3 in the bond market, which I'll touch on, 1/3 in the CMBS market, and 1/3 in traditional life companies and banks, just roughly. We accessed the high yield bond market last April. We had been monitoring that market for quite some time, and we issued a $400 million 8-year high yield bond offering in April, and we are very, very excited about that piece of financing. Today, again, the high yield market is very, very hot at virtual all-time lows in terms of the yields on that paper. We likely won't access it, not because we don't like it today, we just probably don't have the need for that type of capital this year. We did do some CMBS in the first half of the year. The CMBS market is very choppy today. Unlikely that we'll access the CMBS market in any meaningful way this year unless it strengthens materially from the current levels. We had been active with life companies and banks. We're very relationship oriented, so we've returned to a number of those relationships last year. We'll do that and then some this year. We expect to be very active in that sector this year.
And we were on a panel here at this event looking at the recovery in the commercial real estate market. And one of the real signs that the recovery is starting to take hold is seeing development in action. What are you seeing in the areas where CNL operates, and do you think activity is going to continue to pick up?
Look, there is really not a need for a lot of new development across most of the country, save and except for 1 or 2 sectors, primarily the multifamily space, where we have been active and we expect to be more active as an equity partner in that sector. So we are seeing some activity in new development in multifamily. We expect to see and have been in discussions with selected healthcare related development in that sector. But absent that, you're not going to see a lot of office construction or spec industrial, again, save and except for just a specific markets.
And Tom, you're active in NAREIT's recently formed Public Non-Listed REIT Council. Why do you think it's so important for those companies to get together and to push forward?
I'm very excited about the council and serve on the executive committee there and chair the policy committee. And look, I think whenever leaders of the industry can get together to collaborate, to solve problems, to share information on an appropriate level, of course, it's a win. And in many respects, while this industry has been around for decades, it really is almost a new reset type of industry, given a lot of the changes going on structurally, better alignment, better disclosure, all that sort of thing. So I think it's a perfect time for the leaders of the industry to come together and as we institutionalize this industry again and again, frankly not dissimilar from how the traded REIT was more institutionalized and came together collaboratively in the early and mid-90s. I see some of the same themes and trends.
Tom, thank you so much for joining us.
You're welcome.
For more REIT news and analysis, be sure to visit REIT.com.